Hello everyone and welcome back to another episode of A Smarter Way to Retire, the podcast where we break down the steps to building a confident and smart retirement plan. I'm Tony Leonardi, your CFP professional based here in Newtown, Fairfield County, Connecticut, and I'm thrilled to be with you today. Memorial Day just passed, May 26th, marking the unofficial start to summer here and across the country. I spent the weekend reflecting, honoring the day by raising a new American flag at home and enjoying some family time. The weather's been wet lately, but cleared up a little bit for us on Monday, and we managed a small barbecue. I fired up my outdoor pizza oven for the first time this season and was even able to pull a few wine cap mushrooms from my garden to make sausage and mushroom pizza, which was just delicious. We also had lobster rolls, thank you Chef Rebecca, ribs, thanks to Mom, hot dogs, hamburgers, tons of sides and salads. That's considered a small barbecue at an Italian house. No pasta. The whole weekend, especially spending time with family, got me thinking about the importance of checking in on our goals as the seasons change. Today we're doing a post-Memorial Day check-in. Are you on track for your summer goals, both financially and personally? We'll review how the first half of 2025 has gone, set some realistic summer objectives, and share actionable steps to stay steady. Whether you're planning a trip, focusing on health, or adjusting your portfolio, this episode will help you align your retirement plan for a fulfilling summer. Grab a cup of coffee and let's get started. Memorial Day is a great milestone to pause and reflect not just on the sacrifices we honor, but on our own progress. I have a friend who has over 20 years in the military, Air Force, Special Forces, Special Warfare, paratrooper, has done over 10,000 jumps from an airplane. I know that he has lost many friends over the last 20 plus years, and it just gives me reason to respect and appreciate Memorial Day a little bit more than I used to. So if you get a chance, you have a friend or a family member that's a veteran, don't forget to thank them for the sacrifices that they've made so that we can enjoy a day off, a nice weekend, freedom, and the beginning to a nice summer. So we're nearly halfway through 2025. So let's take a look back at the first 2 quarters. First, let's think about your financial model. Have you stuck with your budget? Did you account for unexpected expenses like rising healthcare costs or travel? Here in Fairfield County, I've heard from clients about higher grocery bills lately, which can throw off even the best plans if we're not paying attention. Now let's talk about the markets because they've been a roller coaster, to say the least. The S&P 500 index has shown resilience despite some volatility. Looking back, the S&P 500 was around 5,900 and change last week, up 23% from its early April low of 4,800. Though the index has been basically flat for the year overall when compared to the start of the year. We had a solid bounce back from the lows driven by trade deals and policy shifts we discussed last week, like the US, UK, and US China agreements from early May. But last week brought more jitters. On May 21st, the S&P 500 dropped 1.6%, with the Dow sinking 800 points as Treasury yields spiked on worries over Trump's tax cut bill, which could potentially add trillions to the U.S. debt, which already stands at $37 trillion. We talked about that last week. Then on May 23rd, stocks fell again after Trump reignited trade war fears with new tariff threats on the European Union, which were delayed until July 9th, but leading to weekly losses of over 2% for the major averages. We also saw a 1.2% dip in the S&P 500 futures after the Moody's downgrade on May 16th. Adding to the mix, the bond market is sending signals. 30-year mortgage rates hit 6.86% last week, the highest in over 3 months, which could impact your fixed income strategy or housing plans. And then coming out of the long weekends, on Tuesday of this week, the stock market saw a significant uptick, with the S&P 500 climbing over 2% to close at 59.21. The Dow gained almost 2%, up 700 points, and the NASDAQ rising almost 2.5%. Why did this happen, you ask? Well, there are a few possible explanations. Trump's tariff reprieve on the EU. Trump delayed planned 50% tariffs on the European Union until July 9th, easing trade war fears that had previously rattled the markets. This move improved prospects for the US-EU trade agreement, boosting investor confidence and risk appetite. There was also an unexpected jump in consumer confidence. So a better than expected report on U.S. consumer confidence was released last week, showing improved consumer sentiment. This data signaled potential economic resilience, further fueling the market rally. We know that consumers drive the U.S. market, so it was nice to see confidence on the rise. All 11 S&P 500 sectors ended higher, which is a great sign, with technology stocks leading the way. The broad rally was supported by a shortened trading week post-Memorial Day, which may have amplified momentum. The surge largely offset steep losses from the previous week, when the S&P 500 and Dow had dropped over 2% due to tariff threats and bond market concerns. The tariff delay and positive consumer data provided a catalyst for a sharp recovery. These factors combined to create a favorable environment for stocks, snapping the S&P 500 and Dow's 4-day losing streaks. The bottom line on the markets is we're still expecting some wild swings or volatility, which could have some people spooked. If your portfolio is heavily tied to the market, how has it affected you? Are you seeing the growth you expected? Or do you need to adjust your expectations? Have you adjusted your spending to offset this flat market performance? Also, what mechanisms do you have in your portfolio to provide downside protection? Most of my clients have some downside protection built into their plans, and I know that they appreciate that. Let's take a moment to reflect, and most importantly, are your investments aligning with your risk tolerance over the long haul? If you're feeling uneasy with all this volatility, tariffs, bond market concerns, and a flat year so far, it might be a sign to review your asset allocation. Remember, we want to keep your eye on your long-term plan. Reacting to every short-term headline will not only drive you crazy, but it probably won't do anything to improve your long-term probability of success. We'll talk more about some actionable steps later in the episode. Now that we've looked back a little bit, let's look forward to summer. Summer is a season of enjoyment. Maybe you're planning a trip, like my son Tony, who just got back from France. By the way, I mentioned last week that Tony was going to France with his girlfriends. Well, he went to France with his girlfriend, but he came home with his fiancée. So congratulations to Tony and Maddie on their engagement. Also, my niece Alexa had her second child on May 25th. 5/25/25. Baker Calo Beger. So we added 2 new members to the extended Leonardi family this week. What a week. We're all very excited. Back to summer plans. Maybe you're planning a summer trip, or maybe you're focusing on hobbies like gardening, which I've been tackling here despite the wet weather here in Connecticut. Summer can strain your retirement plan if you're not careful. Overspending on travel or activities can derail your budget, and neglecting your health can lead to higher costs down the road. Let's set some realistic summer goals. First, think about your financial plan. Can you allocate a fun budget for summer without compromising essentials? For example, if you're planning a beach trip, set a daily spending cap. Maybe $100, $200, $500, whatever fits into your budget, and stick to it. Use rewards points for flights or hotels to keep costs down. I had a client last year who saved thousands on a trip to Cape Cod by traveling midweek in June instead of in July. You can even think about delaying that summer vacation until September to save even more. Small tweaks can make a big difference. If you work with me currently, you most likely already have a travel budget baked into your financial plan. If you don't have a travel budget, or budget at all, or a financial plan for that matter, let me know. I'd be happy to help you. Second, let's tie in health. Staying active in summer can extend your healthy years, reducing future healthcare costs, a key part of your retirement plan. I suggest simple habits like walking 20 minutes daily or tracking protein intake to maintain energy. Maybe your summer goal is to join a local walking group where you live, or to try a new outdoor activity like pickleball, which is huge around here in Newtown. Health and wealth go hand in hand. More active years mean more time enjoying your savings without dipping into them for medical expenses. I know many of my clients enjoy all types of outdoor activities in the summer, and that's great. It's very important to stay active, especially in your retirement years. Keep moving, everyone. We're going to explore this topic of health, the health-wealth relationship a bit more in an upcoming episode. I'm in the process of lining up a special guest, so stay tuned. So let's wrap up with 3 actionable steps to keep you on track this summer. First, review your probability of success meter. If you're a client of mine, you know this tool helps gauge your retirement plan's strength. Check it this week. Are you still on track despite market swings or spending changes? If you don't have one, let's talk. I'd love to help you build your plan. Second, adjust your summer spending. Look at your budget. Can you allocate X amount of dollars for a weekend without cutting into your emergency fund? If not, scale back. Maybe a day trip or a couple of day trips instead of a week-long trip. Small adjustments now prevent big problems later. Third, prioritize a health goal. Commit to a 20-minute walk 3 times a week or try a new vegetable recipe to boost your nutrition. Here in town, the summer's farmers markets are starting to ramp up. Grab some fresh produce and make it a goal to cook 2 or 3 healthy meals a week. Take advantage of all the wonderful fresh vegetables we'll have access to this summer, whether from your own garden or from a farmer's market. This is fresh vegetable season, and I love it. These steps, a financial review, budget tweaks, and a health focus, will set you up for a balanced, fulfilling summer while keeping your retirement plan on track. So that wraps up today's episode of A Smarter Way to Retire. We've done a post-Memorial Day check-in, reflecting on the first half of 2025, S&P 500's bounce back, trough to peak, your budget progress, and setting summer goals to balance fun, health, and finances. Stay steady with small, intentional steps, whether it's a financial review or a new exercise habit. For more insights, visit my website, leonardifamilywealthcare.com. Listen to more podcasts on my podcast channel on Spotify or Apple Podcast. You can also watch these videos on my YouTube channel and download our 2025 Retirement Reset Checklist from my website to kickstart your planning. And if you so desire, don't forget to rate the podcast on Apple. I would appreciate that. Whether you're in Fairfield County or across the country, let's build a smarter retirement together. Until next time, stay informed, stay steady, and enjoy summer.
Securities and investment advisory services offered through Osaic Wealth, Inc., member FINRA SIPC. Osaic Wealth is separately owned, and other entities and/or marketing names, products, or services referenced here are independent of Osaic Wealth. The opinions expressed herein are for general information only and is not necessarily the opinions of Osaic Wealth or its representatives. Investing is subject to risk, including loss of principal invested. Past performance is not a guarantee of future results. No strategy can assure a profit nor protect against loss. It is not intended to provide specific advice or recommendations for any individual. Please consult your financial professional, attorney, or tax advisor with regard to your individual situation.